Masan Group has shown impressive growth across its various business segments, and their diversified portfolio in consumer goods, retail, and resources makes them an attractive investment. The company's strategy of acquiring and integrating businesses, particularly in the food and beverage sector, has allowed them to capture a significant market share in Vietnam. With the rising consumer demand and their strong distribution network, Masan is well positioned to continue its growth trajectory.
I'm concerned that Masan's rapid expansion has come at the cost of taking on significant debt. While their acquisitions have helped them grow quickly, they've also increased their financial leverage. High debt levels can become a problem if the economic environment changes, especially in a market like Vietnam's, which is still developing and can be volatile. The risks associated with managing this debt, particularly if interest rates rise or if they face unexpected downturns in any of their key markets, could outweigh the benefits of their diversification strategy.
Debt is a valid concern, but it's important to note that Masan has consistently demonstrated strong cash flow generation, which allows them to service their debt effectively. Their acquisitions have been strategic, focusing on high-growth areas like consumer goods and retail, where they've been able to quickly scale operations and improve profitability. Additionally, their resource segment provides a steady stream of revenue that helps balance their portfolio and reduces reliance on any single market segment. This diversification is key to mitigating risk, especially in a market with as much potential as Vietnam's.
Even with strong cash flow, high leverage can limit their flexibility. If the company faces a downturn in one of its key segments, say a slowdown in consumer spending or a drop in commodity prices, its ability to reinvest in growth or weather economic shocks could be compromised. Moreover, the integration of acquired businesses always carries risks, particularly in terms of cultural fit and operational efficiency. If Masan can't achieve the synergies they're aiming for, the anticipated benefits of their acquisitions might not materialize, which would put additional pressure on their balance sheet.
Masan has a track record of successfully integrating acquisitions and driving synergies across their businesses. They've done this by leveraging their extensive distribution network and deep understanding of the Vietnamese consumer market. Their focus on building brands that resonate with local consumers has paid off, and they've managed to maintain strong margins even as they've grown. Moreover, their strategy isn't just about growth through acquisition. They're also heavily invested in innovation, which helps them stay competitive and adapt to changing market conditions. Their entry into new areas like retail and technology shows they're not just relying on past successes, but are actively seeking out new opportunities for growth.
Innovation is crucial, but it also requires significant capital investment, especially when entering new markets or industries. Masan's foray into retail, for instance, is a high-stakes move. The retail sector in Vietnam is becoming increasingly competitive, with both local and international players vying for market share. Building out their retail network and maintaining it requires a lot of resources, and there's no guarantee that they'll be able to achieve the scale needed to justify these investments. If the retail expansion doesn't go as planned, it could drag down the overall performance of the group.
That's true, but Masan's approach to retail has been strategic. By acquiring VinCommerce, they instantly became a major player in the grocery retail sector, which is essential in a country where food accounts for a significant portion of consumer spending. They're also leveraging their existing consumer goods business to create synergies within their retail operations, optimizing supply chains and improving margins. The potential to dominate Vietnam's retail landscape is a massive opportunity, and Masan is uniquely positioned to capitalize on this, given their deep local knowledge and established brand presence.
The grocery retail sector is indeed a critical part of the Vietnamese economy, but it's also a sector with thin margins and significant operational challenges. Masan will need to invest heavily in logistics, technology, and store upgrades to stay competitive, especially with the rise of e-commerce and changing consumer behaviors. Additionally, their reliance on the domestic market could be a vulnerability if there's an economic slowdown or if consumer preferences shift in unexpected ways. While they have a strong position now, Maintaining and growing that position will require flawless execution, which is far from guaranteed.
Every investment comes with execution risks, but Masan has shown they can manage complex operations across multiple industries. Their ability to pivot and adapt has been a key factor in their success so far. Furthermore, Vietnam's economy is still on a strong growth trajectory, with rising incomes and urbanization driving increased consumer spending. Masan's focus on essential goods like food and beverages, as well as their expansion into retail, taps directly into these growth drivers. As long as they continue to innovate and execute effectively, they're likely to see continued strong performance.
Vietnam's growth trajectory is promising, but it's not immune to external risks. The global economic environment is uncertain, and any downturn in key export markets, such as the US or China, could have ripple effects on Vietnam's economy. Masan's heavy reliance on the domestic market means they're particularly exposed to these kinds of risks. Moreover, their resource segment, which includes mining, is subject to commodity price fluctuations that are beyond their control. If commodity prices drop, it could significantly impact their profitability, especially since they've invested heavily in this area.
While external risks are always a concern, Masan's diversified business model helps them manage these risks. Their exposure to essential consumer goods provides a hedge against economic downturns, as these products tend to have stable demand even in tougher economic times. Additionally, their investments in technology and innovation are positioning them for future growth areas, which could help them diversify further beyond the domestic market. In the long run, Masan's ability to adapt and leverage their core strengths will likely outweigh the risks associated with their current strategy.
I'm not dismissing the potential, but I think the risks are significant enough to warrant caution. High leverage, integration challenges, and exposure to market fluctuations, both domestic and global, mean that Masan needs to execute perfectly to meet expectations. Given these factors, I'd recommend a more conservative approach, perhaps by monitoring their performance over the next few quarters before making any large-scale investments. It's a strong company with a lot of potential, but there are too many uncertainties to justify a full commitment at this stage.
I understand your caution, but I believe the upside potential outweighs the risks. Masan has proven time and again that they can adapt, innovate, and grow even in challenging environments. Their strategic acquisitions, focus on essential consumer goods, and expansion into high-growth sectors make them a compelling investment, particularly in a rapidly developing market like Vietnam. While it's important to monitor their performance, I'm confident that their strong fundamentals and growth strategy will lead to long-term success.